one thing that SpaceX was able to do exceptionally well was bring talent from different industries. They didn't want just aerospace, talent. They actually intentionally said, we are going to go recruit people from telecommunications, from automotive, from the gaming industry, because they have different ideas on how to solve this problem. And that's what you're trying to do. You're trying to fundamentally do something in a different way than's been done. And if you're all thinking about the problem the exact same way, it's going to be very hard to do that.
Hey everybody, welcome to another episode of The Executive. This is a place where we interview some of the best founders, investors, and operators on their life lessons and advice on how to make it at the highest level. Today, we've got another guest in the aerospace industry. We're with Justus Kilian, who is the managing partner of Space Capital. Space Capital is a venture firm with $100 million of assets under management now, spread across 3 different funds. They've invested in some of the most forward-thinking companies in the form of Rocket Lab and SpaceX, and are continuing to be at the forefront of their industry. Really excited to dig in with you, Justus, today and talk about a whole host of topics. But thank you for taking the time and thanks for joining.
Yeah, Matt, thanks so much for being here. You've spoke with a number of folks that we really respect and like to work together. And so, I'm excited excited for the conversation.
Yeah, we've had a special amount of people on, especially in the space industry with, Monica Palco from York and Stoke Space building reusable rockets. And so it's fun to also get the VC perspective and hear about your portfolio companies. But before we dive into that, because we got a lot to cover there, tell us a little bit about your background and how you got into Space Capital, going back to the early days at Merrill Lynch.
Sure. Space is an incredible domain to be a part of. I certainly have been aware of it and inspired by space, since I was a little kid, but never saw a career path into that. So, was infinitely curious as a kid, loved puzzles, ended up seeing the financial markets as, the biggest puzzle there is. Joined Merrill Lynch, focused on private investments, had a front row seat to the way that venture was changing post 2000 .com bubble. And you saw a shift towards an operator-centric model. So we were writing checks into private equity, venture, private debt. And, I got particularly excited about venture, saw the importance of an operational mindset in addition to that financial skill set. Ended up joining a firm, a venture firm, early stage venture firm that was deploying checks across East Africa and South Asia. Very challenging markets. The importance of partnering with different key stakeholders in an environment to, help lay the ground rules and build a strong foundation. And so I would, underwrite a check. I would drop into a company anywhere from a month to a year to help them grow and scale. Gave me a lot of hands-on experience. And, the thing that I kept noticing in that environment was you fly out of New York, I'd land in the streets of Karachi or Nairobi, and, first thing I do is pick up my phone, try to book a driver, figure out, mapping systems to figure out where I'm at, where I'm going, in an environment where I didn't have knowledge or sort of a sense of truth. I was able to rely on this technology to understand where I was going. And then I found on the weekends, I'd be out in sort of a village or, out in the bush and, stop into a small little town, and the whole town would be congregated under a tin shack or a mud hut, and there'd be a satellite dish pointing outside, and everybody be there watching the local football match, right? And so, it just got me thinking and asking questions. Space technology has been with us from a commercial standpoint for 50 plus years. It has transcended markets, income status. It is a global technology that is allowing people to connect and build and develop. And so, I was, back in New York, sort of starting conversations, trying to explore what was next. Connected with my partners, Chad and Tom. They have an incredible background and a track record of success. Tom is an engineer and a successful entrepreneur. Chad as an investor who's been deeply focused on this category, sort of opening up the barriers to entry. And it was an opportunity for me to bring my institutional knowledge and sort of venture background to the firm to help build an enduring brand and an enduring organization. And so it's been 7 years now, and loving every minute of it. We're just really getting started. It's the early innings.
That's awesome. And you're not the first person that said, early on in their career they wanted to get involved in space and it just didn't feel like there was a maybe career trajectory or access there. But now it seems like it's just, bustling and you don't have to wait. You can actually just jump in right now, which I do want to touch on because you guys have a couple of different products that you're doing. But before touching on that, you had a couple operational roles too. And like you said, you're pretty hands-on, even in your kind of VC role. Can you talk a little bit about that and just how important that has set you up to being a VC now, having kind of been in the trenches with some of these companies?
Sure. I mean, I built out really sort of as deep of a financial and economic foundation as you can. I ended up going to graduate school at the University of Chicago. I focused on, the CFA, which is essentially another sort of master's degree. And all of those tools are great from an analysis standpoint. But unless you understand what your assumptions are rooted in, the fundamental challenges of turning, people and capital, into really productive businesses, you can't be a good investor. You lack that ability to sort of, answer what does it really take? Are these assumptions real? And do so in a practical way. And so that was my motivation to get that operational experience and to work with a variety of different business models to be able to say, this is how challenging it is. These are the barriers you have to overcome. When you just see hockey stick growth, no company ever grows that way. It's always longer, harder, and more expensive than you anticipate. And so if you know that, well, what are some of the common pitfalls or what are some of the common challenges that you face? And how do you make better assumptions to be a better partner to a founder, and potentially help them see some of those, common pitfalls or see around corners where, hopefully you can avoid some of those
Yeah.
mistakes.
Talking about the firm you mentioned, now it's been 7 years, which I'm sure goes by in a blink of an eye. You there's more VCs that are maybe have a focus on aerospace, and maybe it's not their sole thing, but I mean this is your sole thing. And 7 years ago, that was not very common. What was the general thesis
Yeah.
back then to go and do this when maybe it was a little bit contrarian and the risk profile seemed pretty high, right? If something goes wrong, it goes really wrong. Maybe you can't sell that software, and get your money back. It's like things kind of go to zero if things don't go well, but if things go amazing, it can kind of go to the moon per se. So talk us about kind of the thesis of the firm and how the early days started.
Well, I think one of the things that really sets us apart is, we have built rockets, we've built satellites, we have assets in orbit that are generating revenue today. We've led multiple successful exits as operators and investors. So we've seen quite a bit in this ecosystem. And if you were to only look at the opportunity set as the aerospace sector, that is a very narrow sort of thesis. What sets us apart is we invest at the intersection of space and
Mm.
tech. Our primary goal is to take technology that had been mostly used for government and scientific purposes, so defense or scientific purposes, and open up access to those capabilities so every industry here on Earth can benefit from global scale capabilities. And it's really about data acquisition and how that data helps us make better, smarter, more cost effective decisions here on Earth. And so that shows up in logistics, maritime, energy, agriculture, some of the biggest, some of the biggest industries that there are. And um, the foundation of this thesis goes back. We love learning from history. We believe that technology and sort of history will repeat itself, never in the same way, but it can give you a framework to think about where the future is going. And without that, you're sort of just in white
Yeah.
space, and anybody's guess is as good as the next. So um, we wrote our seminal thesis paper, the GPS playbook, 5 years ago now, and it looked at how GPS, a technology that was built for defense purposes in the late 70s, ended up um, being ubiquitous. I mean, every single smartphone that we have relies heavily on that capability today. Our financial markets are timed by it. Our telecommunication services are timed by it. No, it's absolutely Space's killer app. And what we learned is there were some early companies in the 80s and 90s, Garmin, Magellan, Trimble, TomTom, that started to build these commercial receivers to complement what the government technology had was providing, and they were able to find new creative ways to use that capability, like turn by turn navigation and
Yeah.
telematic systems in cars, and it became a differentiator. But the real shift started to happen when Qualcomm and their GPS-1 chip came in, and they miniaturized it to a point where you could put a GPS receiver on really almost anything. And that opened up in the early 2000s. iPhone adopted the GPS-1, and in combination with their app store, they really, abstracted away the space technology, the orbital mechanics and orthorectification and the complexities of working in space, really to a handful of data points that any software engineer could use. And that was the birth of location-based services. I mean, multi-billion-dollar industry, some of the biggest venture outcomes that we've ever seen. Uber, Lyft, Turo, Root, Niantic. Nobody would have thought that in the late 70s the advent of GPS would have helped enable an augmented reality video game that people play at global
Yeah,
scale.
for
It's
sure.
just that level of creativity. And so that's what we're trying to unleash in our thesis, learning from that history. And what you see is a tech stack that helps you go from very narrow use cases to broad scale adoption by abstracting away the complexity. And we invest across that stack. So, we're investing in the hardware, we're investing in the tools, the processing capabilities, the AI systems that are, extracting more insight out of the information. And then we also invest in the applications, the hyper specialized use cases that don't look like a space company, but are able to leverage Earth observation data or satellite communications to do something in a fundamentally more efficient or innovative way. So that was a lot.
No,
I'll
it's
pause
it's
there.
really interesting. Your thesis, like in a nutshell, is kind of like the Velcro example, where Velcro was, invented for space, and now it's used everywhere across the world. And we can't think of, our lives without Velcro. And that's true of a lot of space applications, right? With satellites, and it's amazing how much, you talked about Africa. It's obviously spent some early days of my life in Africa, and we didn't have that at first, right? We didn't have the GPS, and you had to be a local to know how to get around. And now you just need your phone, and everyone's a local, and everyone
Yeah,
has that access. So
yeah.
it's pretty unique how space takes a very narrow focus and specialty in something, and then it's broadened. The application is broadened, and that seems like where the opportunity is.
For it to be successful, it has to reach wide scale adoption. Otherwise, it's just a niche industry that's really, interesting.
Well,
We've got bigger
what
visions than
about
that.
like, so when you're looking at companies and you're evaluating whether to invest, I want to hear the whole matrix, but starting with, how do you figure out, something that maybe is further out, like, at the time it was Velcro, like this was just a space application, or GPS. How do you look at something like, I think I could see the whole world using this at some point, even if it's a narrow focus now?
Well, space has been with us 50 years, right? From a commercial standpoint. And we have a lot of data. We have a lot of experiments that have been run by companies. The first sort of space bubble was in the late 90s. We've already tried global internet once, although it but didn't even get off the ground. So there is a component of technology. There is a component of the market and timing, and then I think most importantly, there's a component of the team. Why are these people the best in the world at you know, solving this problem and bringing this capability to market. And you sort of have to evaluate and think through each one of those things. We're fortunate to have been operating in this area and have really deep networks in a way that you know, an engineer, a former boss, a former teacher, a former manager, of these individuals is literally just one phone call away. And so pretty quickly we can get, some very direct insight into who these people are, what they've done, strengths and weaknesses. And, let's be clear, like, you have to go in with your eyes wide open. There's never going to be something that's a perfect deal. The people that are like, oh, this is perfect, it checks all the boxes, perfect score. That's just never how it happens. There's always some strengths, there's always some challenges. And our job is to be aware of those things and minimize the risks that are manageable, and help augment or support where there are known gaps to set the company up for the best possible success. I mean, that's what I do. We try to go very deep on the team. We try to go very deep on the technology. We have direct experience working in these markets, selling into these markets. We build partners up and downstream, so we can reach out and get a sense of customer demand. And that sort of 360-degree approach helps us make better, smarter decisions. We don't get it right. Venture is a power law outcome, and the same is very much true, in space and our thesis. But if we're able to make a little bit better decisions, we think that can drive significantly better outcomes.
Yeah, and your firm has done a really good job of setting up the whole framework of what you need as a company. And a big part of that is talent. So, you have, as part of Space Capital, you have, Space Angels for early stage investors. I would definitely want to hear, you explain a little bit about that. But the space talent part is also really interesting, where you've created a whole ecosystem of opportunities to get involved in space. How important is that for you when you're investing in companies and you've built this massive ecosystem of people to get involved in these early stage companies that you're investing in?
Yeah, absolutely. So as a little bit of context, we actually, our parent brand, the parent organization, Space Capital, manages everything that we do. So it is a seed stage investor, right? We write checks. That is, that anchors our entire business operation. But we manage two products underneath that help us go deeper into the life cycle of the company and the ecosystem, to create value and be a valuable partner over the longer term. So Space Capital anchored at seed stage, we write meaningful checks, we take board seats, we play a significant role. There's 6 full-time people, 4 operating partners. We're very people heavy at that, thing that we're really good at. These other products, Space Talent, goes earlier into that equation. So we're only able to invest in 1% of the opportunities that we see. You mentioned Stoke being on the podcast. Very familiar with what they're building. We made our bets already in launch. We wish them all the success.
Yeah.
We want great talent to flow to that company. And that makes this investment category more viable. And so space talent is a way for us, even though we didn't invest, it allows us to create on-ramps for great talent within the industry and outside of the industry to find a career that is enabled by space. And I'm still just flabbergasted today that a lot of recruiters or platforms, they could charge fees for this stuff, exorbitant fees to help
job boards are expensive.
Just even get your resume posted into a community,
Yeah.
right? So we're able to absorb the back end costs. We cover all the services, and we make this capability free, publicly available. We speak to incredible talent within this ecosystem. We love to highlight stories. We love to highlight individuals from diverse backgrounds and skill sets that are helping make space, all that it potentially can be. One thing that I'm particularly proud of is a platform that we launched called Gravitate. And so that goes beyond the job board. It activates this network and hosts one-on-one conversations monthly between individuals. And so people that have no experience can match with somebody, who's been working in the industry and find out, what are the challenges? What's exciting? What are the opportunity sets? If you're a young person trying to find sort of your next career move, you can work with somebody who's maybe a little bit higher than you that can help provide direct mentorship, direct guidance. So we've hosted 1,200 one-on-one conversations since we launched it. 90% of people said that the conversation helped them make a better decision. That's the goal. That's what we want to do. We want to invest in the future of great people, finding careers enabled by space. And it's not just rockets and satellites. A lot of it is data that is helping transform, the world that we know today.
It's really unique what you're doing, because your firm is not seeing this as a, zero sum game, or, if we invest and that's all we care about is that company. You're trying to build the whole ecosystem. And, the other thing you're doing is, especially, with the new product, is probably similar to you and kind of the early stages of our, lives, and maybe even back to high school. Aerospace was told by our teachers, like, that's for our, that's only for our engineers. Like, I don't ever want to hear it from you. Like, that's not a career you can go through unless you're an incredible engineer. And now that's totally changing. And it's cool to see your firm taking a very, taking the leadership role and kind of dispelling those myths and getting people involved early so that people can see all these different opportunities from an earlier stage. So again, they don't have to hop in maybe later. They can hop in the beginning of their career and just start working and finding opportunities. It's really cool. I also want to talk, you talked a little bit about investing and kind of what you're looking for. Let's start with, you're meeting with a company for the first time. What are the lenses that you're looking through? What are the most important things you're trying to figure out with that founder, whether you should invest? And then the second part of that question we'll go into is, then what? What's so important after you've invested that they get right? So first question, just talking about what makes you invest.
Yeah. So being a thesis-driven investor, we write a lot of research. We put that out into the world. We have a view on where the world is going to go. Oftentimes, founders, particularly serial entrepreneurs that have done this a couple of times, seem to really resonate with that. And so we get this sort of unique opt-in where people say, hey, we understand how you see the world. We'd love to talk to you and share what we're doing. And so that is an interesting sort of filtering effect that can help, bring us good quality opportunities. It's one of the reasons we do it. It also, helps us discipline our thinking. It also opens, us up to, be challenged. And we think, you need to have, a contrarian take or, a provocative perspective on things. And so, a lot of people would say they don't agree with the way we see the world. So we get that out there, and it helps us attract, really great people. Then when we get into the point of, a deal flow or a live deal, oftentimes, we have an area that we've been waiting for some sort of technological step change. And so we're just waiting for the right team to show up and make that happen. A great example of this is a company called Zephyr. We recently invested with them alongside First Spark. So they're a great deep tech fund. And they are finding a way to improve GPS to centimeter level resolution. The co-founders, this is their fourth business together. They built 3, they've exited 3. They honed in on GPS, based on some of the past companies that they had built. And we had been looking at this opportunity for 6 years. I mean, really since I joined, GPS is a great tool, but it has very real limitations. And there's a variety of ways you can solve that. You can launch private satellites into space that are bigger and more powerful. You can build a set of ground stations that help clean up that signal. But there's a lot of CapEx required to both of those approaches. and it's very hard to compete with free, right? GPS is free. So you're having to find a service that creates a lot of value at a very low cost that can scale globally, really, to work. Um, and so, we looked at technology that was using geomagnetism to try to help correct that capability. So we just were patient, waiting for, really what we knew were a couple critical themes. Exceptional team, technology is truly a step change, a market that was really, there was very clear and known pain points, a willingness to pay. And, when we met the team, Sean Gorman and Pramuk Rao at Zephyr, we knew, we were very familiar with them. We'd known them for years, what they'd been building, and we knew this problem set. They'd read our research. They wanted to work with us. And so very quickly, we were able to get to a point where, hey, let's work together. Let's solve this problem. This is the right time. This is the right solution. And the way that they're able to do it is they're actually able to build distributed networks and tap into the GPS receiver on multiple phones or multiple higher quality receivers, and use algorithms to correct that signal. And so Apple does this with their AirTags. They create a mesh network to be able to connect information. This leverages information that's broadly out there that you can tap into and correct it for very low cost and get to very high accuracy. And so for the likes of Uber, the fact that when you go outside, your dot is where it's supposed to be and the driver knows exactly where to pick you up, if that saves 5 minutes, that translated
massive.
across millions of transactions a day. I mean, that's a tremendous amount of value.
One of the hard things I think about your job is the level of information you have to see the patterns, to know that that's a real opportunity. How do you, is it the reps for you of just seeing so many companies, or is it more the heads down research that's really helped you to be, when you see that opportunity, that this could actually work?
That's a great question. And I'm amazed that generalist investors are able to cover such a broad swath of technology that, I mean, this stuff is fundamentally changing humanity. I mean, the next decade is going to be incredible. And there's so many different technologies. It's not just software, right? There is a lot of really incredible new technology that's coming to bear, and a lot of it's being built in our physical world. I don't know how they're able to get up to speed. Even our opportunity set, which is broad, but it is much more defined than what a lot of firms are able to get into. So the best way to answer that is we're very disciplined about learning, writing, putting research out there. Every document that we publish, I go out and talk to 10, 20, 50, different people that are in our network that are, doing the cutting edge research, that have been interns at our companies or interns at sort of the most new innovative companies. And, that forces me to get smarter about, what's happening. Every day then I'm privileged to be able to talk to very, smart, motivated business, leaders, many times that are technical, and ask them, whatever questions I want, and that's just sort of a continual learning mechanism. Beyond that, we built our entire firm to be great at this. So, in addition to the 6, folks and 3 partners and 4 operating partners, everyone goes very deep in a different category. So whether it be satellite communications, geospatial, or the positioning technology, we've built systems. We currently are building systems. And so, I can go out and have a conversation that's, directly related to some of the biggest challenges that are being faced in that ecosystem, right now. So, that is another important aspect of it. And then you get your point where there is pattern recognition. And so we've adopted a practice called that the Department of Defense uses, which is called after action reviews. Every investment we make, we write a 50-page memo. We've improved that memo over time. It lays out our thesis. It dives into, company, the unit economics, and we can go back and look at, what did we get right? What did we get wrong? How do we analyze the team? How do we improve? And, what do we get right? What should we stop doing? What should we start doing? We reflect on that every investment that we make. We document it. We share it internally so we can systematically learn. we are building a learning organization, and that comes through intentionality. You can't just hire some smart people and they go find you some interesting deals. The entire organization has to want to learn, and you have to embed that in the organization to be successful.
From some of the best VCs that I've had the pleasure of interviewing, it's really interesting to see that, similar to the way they ask their companies to build their teams, they're doing the same thing internally. They're thinking about who are the right people in the right spots to give us a really well-rounded approach, whether it's having someone who's extremely technical, someone who's very, financial driven and has that background, and then creating obviously the advisors around the firm. And then also the discipline you pointed out is really interesting, of similar to where we've talked with Andrea Hippo recently about how important board meetings are, because it forces the entrepreneur to really think strategically about their business and get their head out. It's similar to you, where you're doing the research, you have to put it out there. So you actually have to take the discipline and really, sometimes the best way to learn is to teach, right? Because you're forced to really learn the subject matter. So I just wanted to point out that kind of interesting tidbit.
It's an interesting, just a quick hot take. I would say that, venture has been moving so fast and furious over the last 5 years that, I think a lot of investors, were not bringing the full capabilities to the board seat. It was an underappreciated and underutilized aspect of this job, and that's really unfortunate. Like, it is a fiduciary obligation. It's you're responsible for representing all the stakeholders. So that said, you now hear a lot more venture investors saying the board is so important. We're really focusing on it, and it's a top priority, and what a great tool. And I really, we actually spend a lot of time working with founders to see the value in their board. If you construct it appropriately, if you proactively manage conversations, if you provide sufficient data, if you get board members and set the expectation that you're committed and people come to this meeting prepared, you can create a lot of value out of those conversations. And so, but it gets back to this point of, intentionality and familiarity, and really wanting to invest the time to be able to, get something out of it. Otherwise, it can just be a box checking exercise. And a lot of founders, a lot of investors see it as such.
Yeah, it's a good take. Well, you've advised a lot of different portfolio companies. You guys were investors in SpaceX, obviously, most notably. You've seen a lot of things go right, and I'm sure you've seen a lot of things go wrong. So when you're investing in a company, you've made that investment. What are the most important things that they get right in the early days of a company? We'll call it like the first 20 people that they hire. What do they need to nail?
Absolutely. Super important. Oftentimes when we're investing, it's a team of 2 to 5 people, and, they've sold investors on a vision of how the world is going to be different based on their technology and what they're offering. And now they've got the money. Almost overnight, you go from telling the story to actually now executing against the story. And the only way that you can do that is by finding exceptional people to work alongside you and to turn vision into reality. And one of the most common mistakes that I see is founders tend to underinvest their time recruiting, particularly in the earliest stages, in terms of being present for interviews, really supporting the team. They think that they can outsource it. You can't. You absolutely have to be involved. 25 to 50% of your time right after closing a round should be all about recruiting as a founder. Elon Musk famously, the first 1,000 people that were hired at SpaceX, he personally interviewed every single one of them.
Yeah, it's remarkable.
He's a brilliant engineer. But he says his superpower is finding other really smart people, right? And I think that is the common mistake. A lot of technical founders are technical by nature. They want to build a technology. But very quickly on, your role as CEO ends up becoming, how do I recruit people better than me, smarter than me, more capable than me? How do I empower them to do their work with the resources that they need to go, empower them. You need to then go out and tell the story of what you're building to investors and customers and suppliers. And so the role of a CEO is way less about um, actually building things and more about setting the direction and then getting everybody to finding a great team and getting them all to row in the right direction. So um, yeah, I think that's a very common mistake. Two things that we recommend to our founders to help avoid some of those mistakes. So one, I already touched on it. Allocate anywhere from 25 to 50% of your time and interview everyone you hire for at least the first 20 hires. I would say the first 100, if not more. Um, and then two, the common mistake is people they want to move quickly, so they want to recruit the people that they know, that they worked with at a previous company, that they went to the same school with. But oftentimes that does simplify the universe. It does make it easier for you to say, hey, these people I know have a minimum bar of quality. But oftentimes you're bringing very similar perspectives to the same problem sets. One thing that SpaceX was able to do exceptionally well was bring talent from different industries. They didn't want just aerospace, talent. They actually intentionally said, we're going to go recruit people from telecommunications, from automotive, from the gaming industry, because they have different ideas on how to solve this problem. And that's what you're trying to do. You're trying to fundamentally do something in a different way than's been done. And if you're all thinking about the problem the exact same way, it's going to be very hard to do that. I'm a huge believer in sort of cross-disciplinary education, building teams that are very diverse across technical backgrounds and different perspectives, because that helps you go farther, faster, and I think really increases sort of the ideas that you end up seeing, particularly at that early stage.
Yeah, so interesting point on Elon Musk, because he's given credit for his genius, and to your point, one of his biggest geniuses was just hiring incredible people, and also then inspiring them. I was having a conversation with a founder recently and has just absolutely crushed it, and they're continuing to crush it. And, he still got, obviously, as they're scaling, there's so many fires to take care of, but he didn't seem stressed. And I just asked him, why aren't you more stressed? And he answered with a really simple, simple response, and just, I've got all the right people in the right places. And what a relief for that is for him. It's taken him, 4 or 5 years to build that, but he's got all the right people in the right places. And so he has hired people very different than him in the right roles. And that's what I think like you said, you just keep seeing with great founders is they put the right people in the right places.
And then they, step back a little bit, and that can be really hard. You hire great people, but then you still want to be heavily involved. No, you hire great people to let them lead. You've given them a goal. You have to let them lead. And I mean, this is another thing that SpaceX has done exceptionally well is they recruit even the best junior talent out there coming out of undergraduate, a brilliant engineer, and they'll put them in a high stakes role and just give them the rope to go out and like figure it out. And it brings a very novel approach to things. If their approach doesn't work, it's a high ownership environment, and so you either sink or swim at SpaceX, but you have the autonomy to make recommendations, to improve processes, to try something new, and to take bets. And a lot of organizations, they don't give junior people that, much less their senior people. So there's some real lessons in that.
How do you create that? That, like you said, that's really contrarian to 98% of organizations where young people can have input, and more than input, make decisions, make mistakes, correct those type of things. And it's really a flat organization, which a lot of organizations talk about, that they're trying to create a flat organization. They just don't. How do you, from the early days, create the culture of you have the power to make decisions here, ownership mentality?
I think it starts with the middle managers. Often, very underappreciated area, particularly if you're coming from an engineering background. You often don't have training formally in management skills, and I would argue that a lot of MBA programs don't really give you the right sort of managerial skills to do that. But it starts with recruiting and knowing that you have set the talent bar very high. That your company is able to recruit exceptional people. I think one of the hacks that SpaceX has been able to implement is um, they look at what you've done, not what you've said you've done. So it's more about what is the portfolio you've built. And even if you don't come from a top pedigree, academic institution, if you're a hacker, a builder, a maker, you solve problems, that's what they're looking for, right? The people that take initiative. And so it does very much start with that recruiting. But then, the manager that you're working with has to believe in you, right? And has to manage in that direction. And so you have to have a very clear set of goals. You have to know what you're working towards. You have to work closely with the people that you're managing. And then, you have to be willing to step back and let them generate the ideas and give them very real feedback. If it, hasn't, passed the quality test, then there's consequences to that, right? And so that's the expectation. It's embedded in the culture. Managers are trained from that from the very beginning. They see it early in sort of the culture. And then when they step up to be, sort of managers themselves, have that ingrained. I do think SpaceX has done something unique in the quality assurance team across all of their engineering functions has a very high bar. And so, you can experiment within your little team, but if you're going to try to integrate this thing into the vehicle in any way, it better be at a very high standard. And so they put, guardrails, they allow a lot of sort of independence, but when the vision comes together, when the pieces actually come together, there's some very high quality standards and expectations and quality checks to ensure that you're getting to that point. Another example that I think is really interesting is often as organizations scale, they die by the procedures and processes and rigidity that is built by people that are no longer in those roles or maybe even in the organization. And so SpaceX will every process that gets embedded into a team or a function is named after a person specifically. And if that person is no longer there or nobody knows who they are, it gives free reign, to question that and say, why are we doing it this way? Maybe we should, rethink this or cut this entirely. And so it's an interesting forcing mechanism that allows them to challenge it. The last thing that I'll say is, we did write a piece, and one of SpaceX VP of launch, they did put out some comments on the innovation algorithm behind SpaceX that allows them to stay nimble. And it does get to this sort of first principles, operating in white space, challenging the status quo, not accepting, things for just what they are, but really questioning. And, that's integral to everything that they do. And then not building processes, not building systems to scale until you actually know that things work and there's a reason to scale it or a reason to implement processes. Oftentimes, success, a lot of people will think success is just getting the work done, implementing the process, trying to make it fixed and rigid. SpaceX is the exact opposite. It has to be something that can scale before they'll make it fixed or rigid.
I think going back to even just the ownership piece, I'm completely forgetting the name of this Japanese company, but they build helmets, and each helmet is really man-made, and the person that basically signs off on it and makes it has to sign their name, kind of on that internal foam, that they're taking ownership that this is high quality and is going to protect someone. And I think it's such a great thing, it's so simple, right? But it really creates such a sense of ownership when you're you're finishing your product internally. You're like, this has my name on it. And that means it's high quality. So as these, founders, like you said, have built great companies, they build people that take that ownership. But we'd be remiss if we didn't talk about some of the mistakes. You mentioned obviously hiring some people that are just close to you. It's the easy thing, them. What are the other mistakes that happen on the early days that just like kills you? You're like, oh, I've seen that one before. What should founders avoid in the early days?
I think technical founders can get really engrossed, just hyper focused on the technical problem. And it doesn't matter how exciting or interesting your technology is. If customers don't want it, if there's not a willingness to adopt it, um, if there's not a willingness to pay for it, the timing may not be right. And getting out of the door, socializing, hearing and actually listening, to those customers, taking that feedback and embedding it into the product design and the technology that you're building is, absolutely critical, and I think often overlooked. So space has faced this challenge for sure. Sort of in the, I would call it the 2010s to 2015s, a lot of the Earth observation satellites that were built, the companies were full stack providers. So the founding teams were really good at building satellites, or that's what they were excited about. Small satellites, CubeSats, that was sort of the time. And so they, convinced people that this was a whole new way of doing things. It was incredibly exciting. Um, so they built a number of these satellites. They put them up on orbit. They were general purpose platforms. And they said, if we build it, people will come. Well, it didn't work that way. The biggest customer for, Earth observation data has always been the government, Department of Defense in particular, and scientific missions, and then typically the agriculture industry has been sort of, those are the bigger players. And so very quickly they realized, okay, well, we've now got all these satellites. There isn't the connective tissue to actually bring this information down. So we have to build a whole network of ground stations to actually get this information back at more real time. Then we have to build the processing capabilities and the algorithms to actually extract insights, because nobody wants the pixels. They, want to get information. And then we actually now need to train the market on what this data can actually be used for. And then we need to deliver that data to the customers in their respective industries at the point in which they would use it. And so we need to actually build some applications that help, them get and understand the value of this capability. And so, that to me is sort of the first mover disadvantage. You got to build the full stack, very costly, takes a long time, requires you to have, an intimate understanding of many different customers across many different industries. And your core founding team, are satellite engineers. That's not what they're set up to do. Very, very, very challenging. Fortunately, there's been specialization across sort of the tech stack, and you don't have to build it all vertically these days. But there is tools that are making it much easier and much more.
So almost the original
adopted.
thesis,
so that importance of getting out to the
almost
customer.
the original thesis and business plan was wrong from the get go.
Yeah.
Do you?
But it was by necessity in some ways, right? There wasn't the technology out there to do it otherwise. So a lot of times a first mover in any market, it could be physical goods, it could be the enterprise SaaS, have to build a full stack solution.
What about that when you're involved in your portfolio companies? Like, how do you see your role? Because sometimes you see those things and maybe they don't see some of those blind spots. How do you kind of craftily and carefully advise them on that? And what are the other things that you're really trying to support them with?
Yeah, I mean, let's be very clear. The founders are doing the hard work. They are turning vision and impossibility into reality. That is, that can't be understated. And so I think the best that we can do as investors is help them see common patterns, or and no company grows in the same way. No company fails in the same way. So to say that there are, these three reasons are the reasons companies fail, it doesn't equate. But what you can do is help, maybe see around a corner. You've seen something similar in the past. You can offer guidance. Your network can, introduce a customer or help accelerate, a conversation. And so that's really the best that we can hope for. We are a supportive partner, helping a team of incredibly ambitious founders trying to do something that is likely impossible. And if they're successful, they proved us wrong. And so all that we can do is try to help remove a little bit of friction in that. We do that, one, by capital, two, by helping them find really great people, three, by helping make some introductions to, folks that are knowledgeable, well connected, on the customer supplier side. And, and then hopefully also then help tell that story and help them raise additional capital and bring additional parties around them to further that vision and further the tools in their toolkit, the support, capabilities that are beyond what we have. And I think that's all we can do. It's a support role, and it is always custom to what the company's doing, where they're at. I wish I could say these are the three things that cause a company to fail, but it's never that
different
simple.
for every company. Well, I want to just, as we start to wrap up, talk a little bit more about your career. I mean, you are kind of in a dream job to many, right? You're getting to see companies that are building some of the most incredible futuristic type products and working with some of the best entrepreneurs on the planet. And, that doesn't happen by accident. What do you think, looking back, were some of the things that you did really well in your career that got you to where you're at today in this, dream job, in my opinion?
I think the single thing that, has helped me get to where I am is being curious, and being curious enough to take on a new role, go and do something that, felt like it was a little bit beyond my capability, and stay there long enough to create real value. Um, Oftentimes, the first 6 months to a year in any job, you're just learning the ropes. And, before you're able to really build the institutional and social capital to really help an organization grow, it could take 2, 3, 4, 5 years for that to happen. And so, every job that I've had, I've been thoughtful. Am I staying on an exponential learning curve? And have I been able to solve some big, meaty, important problems in this organization before I'll jump to the next thing? And I think that sort of dual approach has helped me time my transitions appropriately. I'm not leaving an organization sort of, out in the rain, and but I'm not getting complacent in any sort of, one space. I think then the second is just having, a curiosity and an excitement for big new ideas. And, you know, venture is a great way to sort of have a front row seat and to have an opinion on what the next 3 to 5 years will look like in terms of technology and innovation. And, if one of those companies plays out, it could change the social conversation and the way that we, operate as humans on the earth. So, you do really have a disproportionate potential impact given sort of this role if it does play out. So, yeah, I think that's probably been the single thing that's helped me get to where I'm at
What about
today.
now as a as a partner in a venture firm? How are you honing your skills and trying to really improve to kind of be the best VC that you can be? What are the important things that you're working on now?
I mean, I love listening to younger people that are just getting into this industry. They come with fresh eyes. They come from, oftentimes very different, a wide variety of academic or sort of work backgrounds. And they're finding new ways to build relationships, to approach the question of, seeing, winning, and supporting portfolio companies. And they're sharing those ideas. And, I think it's easy for us to sort of say that, the most seasoned venture investors have sort of solved this problem and they know how to do it the best. But I'm really inspired by the younger folks that are coming into this industry. They work incredibly hard. They listen to the founders when oftentimes, more senior folks, operational in particular, I think, if you've built something and you've seen success, it can be very hard to really hear what the company is doing and very easy to just say, here's the playbook to solve that problem. But no company faces the same sort of growth curve. No company faces the same challenges. And so that skill, that willingness to really listen, understand, empathize, and play that support role. A coach, you're never building, you're never doing, you're supporting. And sometimes I think firms can sort of cross that line. And so, you know, um, that is probably the single way that I'm trying to stay ahead of it. And there's a lot of solo GPs that have come up. Um, I think oftentimes this industry has been dominated by men, so it's incredible to see women and the unique sort of skills that they bring to the role of venture and the way that they approach deal making. They're naturally, many of the women I know are much better at relationship building than
Mm.
I am.
And they're probably better listeners, which you hit on is
Relationships are
pretty important.
yeah, yeah. So there's a lot to learn. There's a lot to
Yeah, I
learn.
mean, it's really interesting. Talking about how do you hone your skills, and the number one thing was listening. And the other thing that you hit on earlier that was really important in your career was curiosity, which I'd say the vast majority of people that I've had the pleasure of talking to, whether it's investors or founders and operators, is curiosity. And curiosity led to so many different things that they were just willing to try because they were curious. So I love those two, curiosity and listening. Well, I want to hit you with a little bit of a fire round just so we can get a couple of these answered. So I'll ask you a few of these questions. Maybe what's something about your role that maybe would surprise people that they probably wouldn't typically maybe see in a venture type role?
A meaningful part of what I do is, also behind the scenes work. So, trying to understand our positions, how they're valued, understanding the macro market impacts of how the public markets are trading and how valuations impact the private markets. I think people often think of venture sort of being isolated or independent or removed from some of the headwinds or the dynamic nature of public markets. I mean, that's not the case. More and more, the regulatory environment is forcing venture to be priced more dynamically, and so these are the behind the scenes things that are not sexy, but incredibly important. To have a command of your book, a command of your positions. You're taking in relevant information and being informed about the state of the market and state of the dynamics. And so, that does take, some meaningful sort of cycles in my day to day.
For sure.
I think, one other thing that I think is way more interesting is I host weekly office hours where anyone can sign up and block time on my calendar just to talk about anything. And,
Yeah, that's
I love doing
out
this. I
there now.
started out
Is
doing it
that open for
monthly.
anybody?
Yeah, it's open for anybody. I'll share
Awesome.
the link. So, um, um, but again, it goes to that point of learning. A lot of times I learn a lot through these conversations. And it's about, building relationships. It's about investing in sort of people's future career path in the hope that one day we'll get a chance to work together. Um, and so I started this monthly and now I've moved it to weekly just because I love the conversation so
Yeah,
much. So,
almost like a
um,
professor type.
yeah, may not
Yeah,
seem
professor
obvious, but
type role almost, right? Or way to
yeah,
do it.
yeah.
All right. What about the what's the? We'll start actually with worst advice. What's the worst advice you've ever received? Looking back, like that was terrible advice. Looking back now.
Yeah, sure. I grew up in a small town. Um, I love computers at an early age. I started coding sort of on my own, and one of my teachers, told me to get outside and play with the other kids and stop coding and trying to write computer games. And I think, that fundamentally changed the trajectory of my life. I would have probably gone very deep on the computer science side. Um, and I did get outside and play. I loved it. I had fun, but I never really sort of picked that up. I never really explored that to the fullest extent. And so, um, yeah, uh, that's a pretty
No,
specific
it's
situation,
what a few
but
people have said too,
yeah, it
of
changed my
just
life.
people telling them they shouldn't do something. That's what a lot of it comes down to, right? Of you shouldn't do this. Maybe you're a female, you can't be a fighter pilot, right? Like just advice back then that now maybe we look at it as like, come on, like that was so off. But at the time, it was more accepted, unfortunately. So interesting that sometimes the worst advice is
Yeah.
what not, what you shouldn't be doing. Okay, what about the best advice? I'm sure you've gotten a lot of great advice over the years. What's something that really stands out to you?
So to seek out mentorship, we hear how important mentorship is in careers, but oftentimes, we're not given the practical steps. So everybody I talk to, I try that is looking for mentorship and looking for that next step in their career. Um, who is a person that you look up to and admire? I want a name, like, who's somebody that you're following, what they publish, what their comments are, what their career arc look like. You need to take the abstract and turn it into very concrete examples of people that you admire, and understand why you admire them. What is it about them? Because if you understand those two things, you can start a conversation. You can start that mentorship immediately. You can reach out to that person and tell them why you admire them and ask if they'd be willing to give you 5, 10, 20 minutes of their time to help better understand who they are and how they got to where they're at. And flattery is the best way to open a door, especially when you're young and curious. I have met very few people in my career that have said no to something like that. So that is, I think, a very practical way to change the trajectory of where you're going, just by taking those two steps.
Yeah, something I did really early on when my first, couple of years in the business world was I would reach out to people, and like you said, I would flatter them first line, just saying like, I really admire this about you, and I'm asking like, what if you had to share one piece of advice, what would it be? And it's just an email, and it was amazing how many people got back to me, and most of them, almost all, responded to me on the first email. And I think what's sad is I stopped doing that because we think we don't have as much to learn, or that maybe we're not as, now that we're older, we should stop doing that. It's kind of like, why, right? Like, why not? Why ever stop? We can always learn from somebody. And I think you said it well when you first share that admiration and that you've done a little homework, not just kind of forcing the ask.
Yeah.
How powerful is that?
Yeah. Incredibly powerful.
All right. I got to hit the last. Well, actually, I do want to ask, do you have it first on the favorite book? I love hearing favorite books. It can be on space. It could be personal. Like, is there a favorite book that's really helped you in your career?
I mean, I love science fiction. I love Asimov. There's endless, sort of science fiction stories. But one that I think is, less well known and pretty geeky and near to my heart, is a company called The Origin of Wealth. It takes a fundamentally different approach in understanding how economic systems operate. It's based on complex dynamic systems and chaos theory, and it's a non-equilibrium system, which is the opposite of the way all modern economic theory is built. So it's an incredibly powerful book. It really helped answer some interesting questions around how societies operate, how information gets built, who sort of ends up owning and influencing power in society. How much can you actually do to change those things at a structural level based on communism or capitalism or different systems, or even at a micro level? So, I mean, really profound and complex questions. It gives some very interesting insight too that I haven't found in a deep variety of economic study in the past. So I would highly encourage people to take a look at it. It's very thought provoking. And I wish that there was more done in this field of research. I actually think now we have the modern computing capability to really push this field forward, but it's not sort of widely adopted. So
that's great. We'll put the link down in the comments below. So as we wrap up, I want to hit on maybe one of the most important questions is for founders, if you had to leave them with one piece of advice, what's the most important piece of advice you'd give them?
I mean, starting a company is, 10 years, 15 years of blood, sweat, and tears to build your company. If you're not incredibly excited and passionate about the problem that you're solving, you're going to miss a lot of, time with your family. You're going to give up a lot of things in your personal life to make this dream a reality. Entrepreneurship is not for everybody, and that's okay. There is an opportunity to have a lot of influence in, big companies. The largest corporations in the world create the most value. They are what actually raise our living standards and, our wealth. startups, sort of drive the curve forward, but they don't create a lot of the value in society. So it's okay. Like innovation is sexy, but it's not for everybody. And then I'd say the second thing is um, raising venture capital is also not for every company. It really is only a small subset of companies that want to get on a hamster wheel where you're chasing exponential growth. And that means every 12 to 18 months, you need to find a way to hit rapid growth metrics and raise new capital to give you jet fuel to continue to scale exponentially. And if you don't see that, if you don't want to be on that wheel, that's what we're going to be pushing as your investors. So, be aware of what that looks like before you get into it. And if you don't want that, you're going to give up influence, power, direction of some of your company as you raise this outside capital. And if you know, so be aware of what you're getting into. There are other places to bring in capital if that's not what you're looking for. And building a great company is what success looks like. Not raising venture capital. That is not success. That is only a step in a direction. So it has become very cool, to announce a huge round and you've got these investors around the table. Most of those companies fail. I would say some of them are not even meant for venture capital, but just because you can find a check doesn't necessarily mean it is the right decision for you and your company.
Yeah, and probably so important for you to see that too, and maybe even talk to some VCs who have shared that with them of like, this is not a venture business. And I've spoken with a couple of VCs that look back and say, pretty honestly over coffee, a couple of their companies' portfolio, they're like, they may regret raising venture because they just do not have the growth trajectory that venture needs and are so stressed. Where if they would have taken, and this is less on the aerospace side, obviously a very capital intensive business, but if they would have just grown slower, they would be in a totally different spot now. But our world doesn't allow for it. And so they can't get off that hamster wheel.
Yeah.
To end on that note, but no, we've covered a lot of really interesting things. Really appreciate you taking the time. Really fun to hear about your career. Obviously being on the boots on the ground in Africa and seeing all the applications of space, to even hearing your advice on reaching out to mentors. I think it's so important for anyone at any stage of their career. We can always be learning from someone. There's a reason why big companies still have board of advisors, right? We can always be learning. So Justus Kilian, really appreciate you taking the time. Thanks so much, and excited to talk to you again in the future.
Absolutely. Thank you, Matt. Really appreciate being here. And if there's one last thing that I would leave anybody with, space has been an important part of our modern economy, for the last 50 years. We are only beginning to see what this new technology and new capability that's been built over the last 10 years is going to enable. It's hard to see any future where space is any less important than it is today in our daily lives. So if you're not familiar with it, take a look, dig in, stay curious, because there's an opportunity here and it's only going to become more important.
Absolutely. And if you're interested in, getting a role in space, definitely check out Space Talent. If you're interested in investing, check out Space Angels, right? An opportunity to potentially invest at really early stage if you're an accredited investor, which generally means, if you have $1 million net worth, or, make on average $200,000 per year per user, per person, definitely check out Space Angels. We'll have to maybe break that down in another segment, but we'll put the links below so you can learn more. And I'm sure you can reach out to Justus at any time if you want to learn more about those two things.